Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:21 a.m. as I'm starting the video on Thursday, June 2nd. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin up 0.4. Oil is getting smacked down 2%. Equities more or less green, but not by a lot. 0.4. Nat gas was up big yesterday, about 7.5%, up 1.5% this morning. Gold hanging in there at up 0.5%, and copper's up 3%. That'll be a nice kick there. Over on the macro front, ADP, jobless claims, got a productivity report, factory orders. Because of the holiday, we've got both nat gas and oil inventories this morning at 10:30 and 11. We've also got that OPEC meeting, which is, I guess, weighing on the price of oil. That's going to be a little painful for me this morning since I'm loaded with that stuff. Tomorrow, we've got the big May jobs report. So that'll be out before the bell. So if there's, any adjustments you want to make to your portfolio before that report comes out, could be, market moving depending on what it does. So keep that in the back of your hat. Last night on earnings, Chewy and MongoDB are up after their reports, but C3AI got destroyed. It's down about 23%. This morning we've got Hormel Foods, Sienna, Duluth Trading, and then we've got some bigger names after the bell: CrowdStrike, Lulu, Restoration Hardware, Okta, and Asana. Some more software names after the bell this afternoon. So that'll be interesting. Just on a personal note, not feeling that hot this morning. I guess it's sinus headache season here at World Headquarters in Ocala, Florida. So, the drugs have been taken, waiting for them to kick in. So let's go over this. I'm going to go over it rather quickly. We did have some events yesterday that I want to hit. Starting off with our oscillator, we have been did our moonshot, and then we've come back to 60. I think if you're a bull, you want this to kind of hesitate in this area and not just, if it just collapses, everybody will look back at that and say, well, yeah, it was overbought. You should have been buying puts. So that'll all be clear in the rear view mirror. So something to keep an eye on. Checking in on our breadth. Remember, we were down here just a couple weeks ago, down at the lows. We have moved up towards the middle of the range. Percent above the 50 is now trading in this 40% range, which is a lot better. A good sign of a continued rally is to get this above 50% on the scale. NASDAQ looks pretty much the same way. Here we did not go as high on a relative basis. NASDAQ has been lagging a little bit on the, as far as leading the charge. Now we're back below 60. I think we're going to know here in the next little bit of time whether this rally can proceed or if it's just going to roll over. And that's the nature of a bear market rally. They're skittish. They're hard to trust. They can rip your face off, going to the high side, or they can break your heart and fall shy of where you think they can ultimately go to. So you've got to stay real flexible and nimble, and not try your best not to cling to, it's going higher or it's going lower, because if you lock yourself into either camp, that could end badly. Here's the percent above 50 for the NASDAQ, and here you can see still not a huge amount of participation, with us only, we came up to 40 and then backed off to 30, so still at the low end of the range. Now, yesterday, the pre-market looked like really promising. We were up nicely, but by the time the bell rang, and certainly by 10 o'clock, they were pulling the rug. So we explored the high side and the low side of this resistance zone here that runs between 410 and 415. I do want to point out that price is currently pinched between a couple key levels as far as the moving averages go. We've got the 8 and the 20 below acting as support, and then we've got the 50 above acting as resistance, although we have not really come up to give this a solid try yet. But it's an interesting setup, and I think price, once it makes its move in either direction for these from these moving average levels, then we'll kind of know for sure which way this thing is going. And let's go over to the 60-minute chart. You can see here we started the day looking really nice, breaking out above this 415 area, and then I guess there was a hot ISM number which popped yields, which then the algos got a hold of it, and some pretty there are a couple scary bars there going from 415 to 407 in a heartbeat. We did stop right on the top of this gap, and that's why you draw them in there. Came right down to the top of the gap and then moved up and then kind of had a crappy close. Now I want to point out a couple things. This little 4-bar action here after 2 sharp sell bars, that looks like a bear flag. I mean, if you just look at it, first leg down, 50% half back, second leg down, fill the gap, come into support here at 405, and then there would be a big decision to make. So, not predicting anything, I'm just saying from a charting technical perspective, that scenario is should certainly be in your playbook of possibilities. What would negate that? Well, if we can have a strong opening, get back above 411, get back into this zone, and then go up and test the top, then the that little bear flag scenario is would be invalidated. But just right as it sits now, it's got the nice symmetry you like to see in a bear flag. It just hasn't really played out yet. So anyhow, we got 411 overhead as resistance. and we want to see that taken out if you're bullish. Very much the same kind of scenario here on the Qs. We've got we took a look above 310 in the morning, and then they slammed it back down to 305. We've got the 20 and the 8-day below acting as support along with this gap, and then we've got the bigger resistance zone up here at 317 to 322 with the falling 50 EMA here in green that will act as resistance. Now, because the 50 is falling, as time goes along, that 50 will fall below 315, and then price would have to get through that before it could get into this zone here. I mean, to really get some bull market or bear market rally type action, I think you got to get up here and at least make a run at 322. This would be the comparable level over on the SPY, where we've got those series of lows, and we've got that range going on over on the SPY. Well, this is the comparable range here, and we're within striking distance, but we're really not that close yet. Here were those two liquidation type bars going from 312 to 306 in a heartbeat. And here again, you've got what looks like a little bear flag. Last 2 hours of the day, we reached up towards 310, didn't quite make it. And now we're back down here towards 306. This action here, below 306, most likely a momentum overshoot. All this selling came right down back through. Today, I don't want to see price start trading below 306. That really leaves the door open for a move down to 302.42, top of this gap. And I mean, at that point, we might get a bounce there, but then there's certainly the opportunity to come down here to fill that gap to 300 and even move down to this 298 level. So stay on your toes. And if you have some longs and you see price dropping below 306, what you can do quickly to protect your book is to just get short some QQQ puts or futures, whatever you're doing, or ARC would be another way to go. Get some puts on ARC, and then at least you would have a couple of greens to go along with your other ones that are red. IWM got stoned here at 187.50, right up near the 50 EMA, got pushed back. Same situation. We've got the 8 and the 20 below acting as support, and the 50 EMA above acting as resistance. We got our double bottom move off of the lows with bull divergence. We came into this trend line pretty sharply, got a rejection. If you use your imagination a little bit, you could see a bull flag here. It's not perfect. We undercut it. So if we could get a break above 185 here this morning, we would have an opportunity to come up 186.50, take out this downtrend line, and then come back up to the highs at 187.50 and see if we can get a breakout there. In the trading room yesterday, I was keying in on the indexes, as I often do. And yesterday, when we got this undercut of IWM, I was keying in on a recapture of 183 as an entry point. And I was telling the people in the room, I'm going long IWM if it recaptures 183. And it did. And then actually, IWM was the first one to recapture the breakdown level. And then the Qs and SPY followed, which helped propel this thing along and got a real nice move up to 185, actually got a push into 185.50, 186 before it fell down at the end of the day. But that idea of getting long on levels that are recaptured, or on the other side, getting short when levels fail from above, I mean, it's a tried and true way to get objective entries and exits from positions. So even if you're just goofing around or getting started and you're watching particular stocks that you're interested in, whether they're indexes or tech names or energy, whatever it is that you're focused on, watch the price action as price loses levels, what happens, where it's going, and the opposite when prices are recaptured. Does price go back up to the prior resistance level? Moving on to FATMAAN, we had a little drama yesterday afternoon. Sheryl Sandberg stepped down after 14 years at Facebook, and here was the morning volatility, and I think this was about I don't know, 2:30, 3 o'clock, where that letter was published, and you got the big whoosh bar. I've got the levels here. You'll have to decide whether you want to let that settle out a little bit, or you want to dive right in. Probably be some extra volatility. I don't think there was a statement from the company about a search, or it was a surprise, or anything like that. So you might have some more news-driven flow here in the next day or so that might catch people unaware. That's a situation where, see, price came into support. You would have taken your objective long against this level here that we pre-identified. You were feeling like really good about yourself and the trade as things advanced, and then you got wiped out. There's nothing you can do. Don't beat yourself up over it. I mean, that's trading. That's a news-driven event. You had no idea. All you can do is decide, do I have time to leave it on, or is my first loss my best loss and I'll regroup later? So anyways, sorry if that happened to you, but sometimes you're sitting in a stock and you get a moonshot out of nowhere. So hopefully all those balance out in your trading. Apple, just a volatile day. I think right here 149 remains your pivot. You're looking for 151 and then 153.50 on the downside. You really can't have 147 break or you're going to be coming down into this area with the gap. So it's kind of got to hold here, gather itself and move higher. Tesla went right back down to the prior low. You see, what was that, Friday? We had a touch of 735. We had broken above. We lost 750 and then right back down to 735. So now we're just kind of toggling in here. I think you got to hold these lows if you have long ideas, and you lose 735, you're going to be down here to 720 with the potential of running it down towards 708. Microsoft had a great open, then they liquidated it right away, back down to 270, and then back up into this 273 area. 273 is your pivot. 270 you got to hold if you're long, and your first target is this 277 area. I think the interesting thing to note, if you're new to the channel, is, you know, all these lines were drawn a long time ago. So, you know, this line was here, this 270 was here, and this line here at 273 was here. So just having those lines set up for you, you know, as you approach your trading day, stopped on a dime, and finished in the middle, right where the lines are. So you can really leverage that information once you get to trust the levels that I lay out for you and focus all your energies on execution. Amazon, they're here again. I mean, the lines of there, we said 2,500 was a target. You got that on the open, and then it wobbled. Here between 2,400 and 2,500, I don't think you really have an entry. I would be waiting for an objective location, either a pull-in to 2,400 or a breakout to 2,500. If you are a sharpshooter, sure, you can use 2,450, but that'll all depend on your skill level and how you can read that opening candle and be confident that it goes in the right direction. For the rest of us, we should be focused on 2,500 and 2,400 for objective trade locations. Google, that big open came right back down to support. So from that standpoint, unless you were already long and pulled the ripcord, you know, after 15 minutes, you were disappointed yesterday because you had a nice open and they faded it right back to where you were. So nothing's changed. 22.75 is your pivot. You really want to hold that, or else you're coming back into the 22.25 area, potentially lower. And if that can hold, your targets are 23.20 and then 23.75. Netflix, same thing, back to a pivot at 195. You got your targets laid out both above and below price. Semiconductors were really volatile yesterday. We have filled this upper gap. I don't know if you can see the wick Actually, we had a couple of them reach up here to 247, get that touch, and then that thing let go fast yesterday. Went from, well, essentially 247 on the touch down to 238, $9 in 2 bars. I tried to buy the recapture of 240 here, just like we just talked about. Got what looked like a promising candle there, but then it came right back. If you're long SMH, I think you got to hold 240, because I think the next time, if it were to break 240, I think you're going to come down here to 236 and fill that gap. So be careful there. The one thing I noticed yesterday on the ARC complex is underperforming, kind of getting back in character. I think these ARC plays are going to be your turbocharged beta names, that if you're looking for, upside beta or you're looking for downside beta, these seem to fit the bill. I mean, ARC-F was down 4% yesterday, came back into the trading range, never got outside it. So now, if you're short, you stay short against 1850, and you're looking for 1750. If you go on to ARC-G, it was down 3.4%. We talked about this yesterday. Fake breakout, bull trap, back into the range. Where's your target? Bottom of the range, right there. So now your objective level is 31. If you drop below 31, that opens the door to 28. So if things wobble, make sure you got an alarm here at 31 or wherever you want to engage it. If you want to give it an extra 50 cents or 25 cents down here at 30.75. If this thing turns out to be a bear flag B, continuation C, you're going to be down here well into this trading range. We do have a small gap here that never got filled, but I think if the thing rolls over, you're going to be down here at 28 sooner rather than later. ARC-K down 3.6%, back in the weeds. We filled a gap, broke into the range from below. Where's the target? Top of the range. Check mark for the bulls. Breakout. Come up to our target. Stall. Lose the breakout. Bull trap. Back into the weeds. Where's your target? Down at the bottom of the trading range at 41. And if it breaks that, it's going to go to 39. And if it breaks that, it's going to 37. So I think a lot of this will depend on the broader market. If the Qs roll over from here, I think these ARC names will be turbocharged to the downside, and you might be able to make some hay in that area. You can see here on ARC-W, really the same. It's the same chart, just with different numbers and scales. We filled a gap, broke back into the range, top of the gap or top of the range, breakout, fail, back in the range. Where's your target? Bottom of the range at 52.50. If that fails, 50. If that fails, 47. So those are some pretty well-defined levels that have been working for the last however many number of weeks. I mean, we established the range in here. Here was our first low. We ping-ponged in the range. We broke down and filled the gap. Then used the range to set our targets. We had our gap above. First touch of the gap usually bounces off. In this case, it did, and never really went back up there, and then just kind of rolled over. So this looks like a fake breakout at this point. What would change my mind? If price goes higher, recaptures 57, and makes a run to 59. And the thing I think we need to keep in mind, and maybe I'll just do it here just to illustrate the point. Put this thing in annotation mode. This was an uncorrected move, right? And you could say that for all the rallies, across the board. We went off the lows of last week, and then we had two back-to-back 3% moves. We were up 6% in 2 days. And then we had a wobble Tuesday, and then we had a wobble yesterday. There's your bull flag setup, right? A, B, C. There's some nice symmetry there. And, I have not spent any time on FinTwit the last couple of days, but I can hear the people out there now. I told you it's over. I told you this was going to be a short-lived rally, and they may be right. But you can't expect to keep stacking 3% days on top of one another like forever. You are going to get a correction. And I view the last couple days as burning off the excess here, with a little pullback that looks a lot like a bull flag. And if you see a breakout from this flag, that's your long re-entry. And you can do that across the board in whatever names that you're trading. It's got to set up like this. Some of them don't look that nice. But what I'm saying is you can't expect to have uncorrected moves go on forever. There is going to be a corrective action. The key now is being really, really nimble, because number one, it could just roll over and die right here, or it could break out and rip the roof off for whatever reason, or no reason at all. That's the thing. There's a lot of light positioning out there by the big boys, from what I understand, just not set up aggressively long. So if those guys decide to reallocate to equities, despite the Fed, despite QT, just to get their books rebalanced after the Q1 and April nightmares, then we could have an extension of the rally. So don't get my advice is, at this juncture, we know the backdrop. We know QT is bearish long term. We know that rising rates are going to make it difficult long term. This is a bear market rally. The question is, how far can it go, and when does it die. And to be really, really nimble, be really, really flexible. Do not get out over your skis and, hold on to narratives. If we lose support today, we lose support. If we break above resistance, take it for what it is. We break above resistance. You don't have to attach a lot of reasons to those events. So go by. This is where technicals shine. This is where technicals shine, because no fundamental analyst is going to be able to tell you what to do, in this situation. It's all technicals. And this is where we should be able to run circles around the guys saying, but the valuations don't matter right now. All that matters is levels. And, there's going to be a guy out there with this AI that's down 23% that's going to say value is whacked. You need to buy. I guarantee it. You don't need to buy. You don't need to buy, because who knows where we might be in 2 or 3 months. So trade level to level. Don't get too wrapped up in narratives. Hope you liked the video. Hope the levels have been helping you. They've been working really, really well. I hope you've been able to take advantage of it. Let's see. Just looking at a recap here. OPEC, I'm not sure that timing today, but obviously they're hitting oil, so they're thinking they know something. Maybe they do, maybe they don't. We have the nat gas and oil inventories at 10 and 10:30, and we got jobless claims here this morning. And then we got the big May jobs report tomorrow before the bell. So trade accordingly. Let's wrap it up there. If you enjoyed the video, you're new here, thanks for spending some time. Hit the subscribe button, the alarm bell. Look over in the show notes. There's a link to drop in your email address on the blog site. That way you'll get my content morning, noon, or night on observations, trade ideas, whatever's going on in the market will come right in your email box, and we'd love to have you. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.